Now, what does this all mean for Zynga as it heads into its IPO? Let's turn to Atul Bagga, an analyst at Lazard Capital Markets. He covers all the big gaming companies, Activision, EA, Take-Two, and he's been a close observer of Zynga's effect on the gaming industry. Welcome back to the show, Atul. Always great to have you here. So you talk to employees of Zynga and other gaming companies all the time. What is it about Mark Pincus? What is he like to work for that would inspire such sort of vehement dislike?
I think Zynga probably came in at a time which was a short opportunity which got opened on Facebook. They came about the same time when the Facebook was opening their APIs for game developers. And they were first on, which was the first company probably very, very aggressive, acquiring users, launching new games, and they've been pretty successful. So I think this is a company which is doing very well. They've been growing at a breakneck speed. I mean, if you look at last 2 years, they've grown at a 2 years ago, March 2009, they were less than 200 employees. Today, they are more than 3,000 employees.
Okay, but I guess the question is Zynga harder than other startups? Mike Arrington of the Crunch Fund, former editor of TechCrunch, wrote in a post today saying, startups are hard, so work more, cry less, and quit all the whining, realize you are part of history. So he's taking the view that all startups are hard work. But is there something different about Zynga? I think
Zynga is probably one of the biggest startups that we've seen in a long time. I mean, how many startups we've seen, private companies with almost like $1 billion revenue, growing at a fast speed and also generating profits. So I think Zynga probably falls into one of those unique spots which are out there. And in terms of hardest, I think it is, startup culture is hard. And if you look at Zynga's core value, if you go to their office, on their reception, they have a big poster with their 7 core values. It's also in their S1. And 3 of those 7 core values are A, be your own CEO, own the outcomes, move at Zynga's speed, and Zynga's meritocracy. So I think they are very upfront about what the culture is, and I think that has been kind of a defining, a very data-driven, very fast-paced environment. I think that's how you would characterize the environment there. But
at a certain point, could this hurt rather than help the business? The New York Times is reporting that Zynga lost out on a PopCap acquisition, potentially a Rovio acquisition, the maker of Angry Birds, because the potential acquirees didn't want to be part of Zynga. Could this have an impact on other acquisitions down the line?
I mean, they have been, on the flip side, you can argue that they have been pretty successful making acquisition. In the last 2 years, every month on an average, they have been acquiring at least one company. So I think it's tough to say specifically on Rovio and PopCap what the reasons were and who walked out of the table, first of all, if these companies were even involved. So I think it's going to be difficult for me to comment on the rumors, but judging by the track record, judging by how the company has performed, so far it does not seem like that the culture has had any impact on the company's performance.
Could this negative publicity impact the IPO, the impending IPO?
I mean, definitely there is going to be some questions, but at the same time, I think there is definitely a lot of appetite for growth stories. If you look at the overall gaming business, the business is changing at a very fast pace, and Zynga seems to be very well positioned in this space. So I think there is going to be good appetite for IPO like Zynga out there.
What can you tell us at the timing at this point? We've reported that the roadshow could start after Thanksgiving, which is this week. When is Zynga going to get on the road?
I know as much as you do. I think we've heard that it's probably going to be sometime after Thanksgiving, so probably it's going to be sometime between now and end of the year.
And what kind of trends are you seeing in terms of the data in the games? Castleville recently debuted. It's doing well, but it's not doing as well as some of the other hit games.
Yeah, I mean, I think on Facebook, the market is definitely getting matured than what it was a year ago. So the super hit games, the blockbuster games are going to be tough to come by. It's going to be far and fewer in between. At the same time, I think now you have other opportunities for Zynga and other companies in this space. You have mobile, which in my opinion is going to be a major opportunity. I think international is going to be another big opportunity. And within Facebook, I think companies are going to be much more focused on monetizing users than they have been in the past. So I think there is still a lot of juice in this space.
What about Zynga's dependence on Facebook? How is it doing in terms of branching out?
Yeah, I think that is definitely there. I think that's a big issue. That's going to be probably one of the biggest risk factors when investors are looking at Zynga as a potential investment. But outside of that, I think mobile is going to be a pretty interesting piece for Zynga to look at. International is going to be a big piece. And they are talking about their own platform, which they unveiled about a month ago. I think that will be another very interesting piece to watch out for.
All right, Atul Bagga. We'll be watching for this IPO of Lazard Capital Markets. Thanks so much for joining us here.
Thank you so much for having me here.
On Bloomberg West. Okay.